Welcome. Let's open the diary on the week starting Monday the 19th of June. First of all, taking a look at what is overall a relatively thin week, I have to say. First of all, on the economic diary, we kick off Monday the 19th of June here in the UK with Rightmove house prices. In Japan, we've got the trade balance data, got some house price data in China and Eurozone construction output. Of course, one of the big things is the Brexit negotiations are expected to start on Monday. Tuesday, kicking us off here in the Australian markets. First of all, by the time the European markets get underway, we'll have had Australian house prices and the minutes of the last Reserve Bank of Australia meeting, and then we get German producer prices on Tuesday. Wednesday, we kick off with minutes from the policy meeting recently from the Bank of Japan. We've got data out in the UK, public sector net borrowing requirement, and we've got the FPC meeting from the Bank of England. In the US, you're looking at two bits of data there. The EIA crude oil inventory is one of the bigger numbers, and New Zealand RBNZ interest rate decision. That could be a Kiwi trade worth looking at. On Thursday, we kick off, first of all, with what's happening in France, business confidence. We've got industrial trends in the UK, retail sales in Canada, US initial jobless claims, it's the weekly jobless claims come Thursday, and consumer confidence in the Eurozone. And I think Friday is probably the biggest day in terms of economic data. We kick off in Japan with the manufacturing PMI flash. You've got a lot of PMI data out across France, Germany, the Eurozone, and we've also got some data out as well in the US as well, the manufacturing PMI flash in the US. And don't forget the Baker Hughes oil rig count as well at the back end of Friday. That's a look at some of the economic data. Quick snapshot of where we are in terms of the corporate numbers. Really, really thin. Nothing to speak of on Monday. On Tuesday, we've got Wolseley, Adobe Systems and N Brown. Wednesday, we go with Berkeley and Hornby, also a trading update from Whitbread. On Thursday, the 22nd of June, we're looking there for numbers out from Go Ahead, Accenture. In the States, we've got Barnes & Noble and Bed Bath & Beyond. And Friday is a relatively thin day, as indeed is always the case. You've got to look ahead to just before the start of US trade, and we get the first quarter numbers out from BlackBerry. Josh is with us with some analysis of some of these numbers. I think we're going to be looking at the RBNZ interest rate decision. I guess this is a trade, obviously, for the Kiwi.
Yeah, exactly. I mean, look, the thing that we're going to be looking out for here is whether they actually decide to add in the comment that they had previously taken out in March about how they needed further depreciation in terms of the New Zealand dollar. If we see here in terms of how it's been going recently, it keeps going up. And if we look back on the weekly time frame, it gives you an even starker reminder of how much we've rallied. Now, crucially, if we look at this trend that we've been seeing since we topped off and we saw this head and shoulders formation, we've been seeing very nice clear move lower, and we've been hitting many a 76.4 retracement. Well, lo and behold, we've come into another very deep retracement, and you can see here with this very shallow trend line, again, it's almost reached it with the high of this week. We're starting to see some selling coming in. There is the potential that we could start to see this market turn lower. If I just get the fib onto this and just get the 76.4 and push it forward, we'll see where we are at the moment. There we go. We are slap bang on that level right now. So for anyone that has a view that this market is going to turn lower like it's done on the past few occasions, then a trade now on a short with the stop above the 73.76 mark for a move back down to 68.18 would give you around about a 3-to-1 for that trade. Ultimately, we've got to look at what we're seeing in the short term, and we haven't seen that reversal signal quite yet. We can see here we are just about managing to create that new higher low. But this 71.72 mark is going to be really key, because if we turn lower and fail to break above this 73.22, all of a sudden you've got this head and shoulders formation coming into play. But are we going to see that, or are we not? That's going to be crucial. At the moment, we're literally pretty much right on that 76.4. So this is a really interesting area to be looking at, and how things play out. If I, again, just take it back to the daily time frame, if we manage to break above this 73.76, then it has very bullish connotations, because it's the first time that we've done that for a number of months now. But if we don't, we could start to see this market turn around from here, and that's why it's a particularly interesting market to be looking for next week.
Yeah, we've spoken about your trade of the week next week, your long euro against sterling. I think one of the big euro trades next week for me has definitely got to be Friday with the PMI data. We've got a lot of economies out with the Purchasing Managers Index. It gives us a snapshot of where some of these big European economies are.
Yeah, exactly. And, you know, sometimes people get a little bit overexcited at the beginning of the week and start to think there's a whole raft of PMI data coming out. Generally, the Eurozone numbers are just final readings or revisions to previous numbers, whereas it's the UK numbers in the first week of the month that are actually the initial ones. The European ones, or the mainland European ones, the Eurozone ones, generally come out, as we see now, later on in the month. And therefore, this is going to be the initial readings. They're going to be a lot more important than the revisions. And as such, you're likely to see volatility around that. Now, the euro has been doing well recently. And we can see here on the daily time frame that we've got this clear uptrend since the beginning of the year. And this nice wide swings has given way to actually sort of shorter, tighter periods of consolidation and sharper moves coming into that. It's not necessarily a bad thing because it means that we're highly trending rather than what you'd find at the bottom here, which are sort of wider swings where the bulls and the bears are sort of fighting it out, and I guess there's a stronger story in each direction at that point. At the moment, we are rallying up from this 76.4 following a pullback. Certainly, the fact that we tried to break higher once more, and we did it marginally, but didn't manage to do anything like what we'd seen before in terms of these sharp moves, that's a little bit of a worry. But we haven't necessarily seen anything to say that we're going to get a reversal quite yet. So we'd need a break below 111.09 to start to point towards a potential for this to be a topping pattern, it to retrace into the, say, 110 kind of mark. But until that happens, this is an interesting area, and the fact that we're starting to turn higher shows that this could be the bottom for the selling that we have been seeing recently. So we are seeing a little bit of upside, but this 111.09 is going to be really crucial, and hopefully we can push upwards and onwards from here and get back to this 113 mark and continue to create that higher high and continue on the trend.
When we were putting this together, I asked you which one of the companies it's worth looking at next week. It was quite thin in terms of the company numbers themselves, but you chose the housebuilder Berkeley Group. Why?
Namely because I think it's an interesting time for the UK economy at the moment. We can see, of course, what would Brexit mean for the UK housing market. We're seeing a slowdown in terms of that. And now just this week we've heard from the Bank of England, and essentially now, it's not to say that we are going to see a rate rise right now, but there's certainly a little bit more of an emphasis towards maybe the Bank of England a little bit more hawkish than we actually thought, and that should have some sort of knock-on in terms of the housing market in particular. Now, this is also interesting because if we look here, this wider picture, we can see here on the weekly time frame, this very clear uptrend that we had for year after year. Now, we're not seeing that at the moment. We're in this consolidation. All of a sudden, we're breaking through that 200-week SMA for the first time in 5-6 years. And now we're in that ascendancy and seeing if we can get back on track. Now, we've come into what I would consider the first major port of call and the first major resistance mark after we bottomed out here. And that is this level here, 33.90. At the moment, it's pulled back from that. But is it just taking a breather? And you can certainly see that previous swing low pretty much matches the swing low that we set last week. We've got that 100-week SMA coming into play. So, yes, if we break below that level, it could start to see that maybe this market's not ready to push higher, and maybe it's not a valid reason, considering everything that's going on in terms of the wider economy. Maybe we shouldn't be reaching new highs for this market. But this 33.90 is going to be key, because if we manage to break that, then it's onwards towards 37.87, and a breakthrough there all of a sudden says, well, actually this was just a period of consolidation, that's done, and we're moving back onto the long-term trend. But can we break 33.90? That's the crucial question here. So the 4-hour chart here shows you that we have pulled back from there. We came back down towards that previous support structure, but we're now starting to trend higher. You can see that higher low coming into play. It's pushing higher as we speak. So a break through this high 32.75 would point towards a potential move back towards that 33.90. And like I said, that's going to be really crucial, and that should set us up for the week. So an earnings week comes at a very good time, because it either needs to break it or it needs to break lower, and that's going to be able to give us our guide for where it's going next.
OK, Josh, thanks very much indeed. Some of the hot stocks to watch next week, Monday, the 19th of June. That's the week ahead here on IG.